Good morning to all of you. Uh, Today we are going to discuss about business valuation for CMA final. Business valuation is part of stage 4, and this paper consists of business valuation and SPM, BV and SPM. BV stands for 50 marks and SPM stands for 50 marks. So the business valuation part has a crucial role in this particular stage, CMA final stage 4. We'll discuss about business valuation. As the name itself indicates, business valuation involves deriving the value of the business. Now, is it deriving the value of business? Is it a simple exercise, or is it somewhat lengthy exercise? Definitely, deriving the value of business involves collecting data, interpreting data, and taking some judgments based on that particular data. What is the ultimate objective of any business? Sir, definitely profit maximization. No, the ultimate objective of any business is value or wealth maximization. So, creating value to the owners or shareholders is the ultimate objective. The goal will be value maximization. For understanding that, valuation is definitely critical. Then, as part of determining the valuation, definitely we will be collecting the data. Now, is it interpreting the data is part of business valuation, or judgment about the data is part of business valuation? Both are part of business valuation only. Valuation requires both judgment as well as interpretation of the data. Then, what is the purpose of this particular business valuation? Definitely, different purposes are there. Like a company want to go for initial public offering (IPO). At what price it has to go for IPO? You have to determine the value of the business. As part of mergers and acquisition, a company wants to acquire another company. How much consideration it has to offer? You have to determine the value of the business. A company wants to buy back its own share. What is the maximum price it can offer? Definitely, value of the business we have to determine. Like that, valuation of intangible assets, goodwill, patents, copyrights. Definitely, valuation is required. And even for financial reporting purposes also, valuation is definitely required. Then, what are the different valuation approaches while valuing a business? Just before going into that analysis, we'll go for an example. Suppose we want to buy a building. What is the fair value or reasonable value for that particular building? Sir, we'll inquire in the market in that particular location. What will be the value of such building? Then we gathered information. Its value is approximately 50 lakhs. Definitely, you can take 50 lakhs as the value of the building. Now, my question is it the only way of determining the value? Definitely, whatever the prevailing market value, definitely one reasonable basis. Is it the only basis? Need not be. Some other person may be valuing based on the rental income. Suppose by purchasing this particular building, I am going to get 4 lakhs annual rent. Based on that, so 4 lakhs annual rent I am going to get. What will be the value of this regular income of 4 lakhs? Based on that, some other person may be valuing. Then any other possible valuation? Definitely, some other person may be valuing based on the cost of creating a similar building. What is the cost of land in the same locality? Then what is the cost of construction? Different cost of construction, material, labor, or whatever overheads involved. Total put together comes to cost of creating similar building. All these are definitely valuation basis. So first one we have discussed about inquiring about the market value. There is nothing but a market approach, whatever it is. The second one based on the rental income will be analyzing the value. That is nothing but income approach. And cost of creating a similar building. Definitely cost approach. As we discussed in our example, all these valuation approaches are useful for valuing the business also. So, as part of business valuation, the valuation approaches, three different valuation approaches. Definitely, we can consider. First one is market approach. Whatever be the prevailing market value of that particular business is nothing but market approach. The second one is income approach, determining the value of the business based on the income generated by the business. So each business will be generating some income and it is capable of generating some income. Based on that, definitely we can derive the value of the business. The next one is cost approach. This is a cost of creating a similar business. Cost of creating similar business. These are the three valuation approaches as part of a business valuation. Then, when the market approach is preferable, when the market value of the asset or the business is clearly available and a number of transactions are happening in the market of similar assets or similar businesses, definitely you can go for market approach. Then when we can go for income approach, when the market value of similar businesses is not available in the market and we can estimate the income more or less so. We can estimate the income more or less so in a reasonable manner. In a reasonable manner, we can estimate the income from the business. Then definitely we can go for income approach. Then we can go for cost approach. When the data is not available for market approach or income approach, definitely we can go for cost approach. It means market value of similar assets or similar business is not available. It is not available clearly. And income from the business, we are not in a position to estimate in a reasonable manner. In such situations, definitely we can go for cost approach. And apart from these three approaches, there is always a chance of valuing the business based on net assets value. Net assets value. Net assets value, all of us know, net assets value is nothing but total assets minus external liabilities. Total assets minus external liabilities. So, in balance sheet, whatever be the total assets value is available, from that the external liabilities, whatever we are supposed to meet, if those are excluded, the remaining part is nothing but net assets value. Simply shareholders fund, equity shareholder fund. So, this also definitely we can apply. Apart from these three approaches, so net assets value also we can apply. Then, as part of business valuation, we'll be learning about the valuation approaches, the fundamentals of valuation, analysis of financial statements. So, analysis of financial statements means analysis of P&L as well as balance sheet, and the relevant rules and regulations, which will be which will be part of valuation, which need to be complied as part of valuation. The laws, the legal rules and regulations, and the compliances that need to be met while running the business. And for this, valuation standards are also available. We'll be learning those standards also as part of business valuation, and deriving the valuation of business based on different approaches, deriving the value of assets and liabilities. An organization may be having different types of assets and liabilities. So, deriving the value of assets and deriving the value of liabilities, thereby deriving the fair value of the business as part of deriving the value of the business. Some businesses we may be investing in equity share, debt instruments, deriving the value of equity, value of debt invested is also part of this. We may be investing in real estate, how to value the real estate properties, part of valuation only. Then deriving the value of business as part of mergers and acquisitions. When two companies are combining, it is a merger, or you can call it as amalgamation. How to derive the value? When a company is acquiring another company, how to derive the value? Part of mergers, that is also part of this business valuation. All these we are going to learn in this business valuation. From exam point of view, business valuation consists of 50 marks. But these 50 marks are crucial from exam point of view, because if you are practicing well this particular subject, you can score from 35 to 40 marks out of this 50. Definitely, there is a possibility of scoring 35 to 40 out of the 50 marks. So, thereby, this paper, BV and SPM paper, definitely you can target 60 plus score. Even 70 is also definitely we can score, and thereby entire grew, entire stage 4, we can clear by concentrating on this particular area of 50 marks. Then we'll discuss a few illustrations. Illustration 2. It involves deriving the value of a share. The share trading details of Reliance Industries Limited from stock exchange is available as follows. If an entity holds 100 shares of Reliance Industries Limited, what is the value of investment as on 31st March 2022 based on last trading price, volume weighted average price for last 12 trading sessions? Now he has given information about Reliance Industries Limited. In Reliance Industries, our entity has 100 shares. We have invested for 100 shares. Then what is the value of investment on 31st March 2022? He is asking based on two bases. One based on last traded price, last trading price. Another one is volume weighted average price for last 12 trading sessions. Weighted average price. So one valuation is based on the last traded price, closing price, nothing but. Other one is weighted average price. So what is the given data? We'll see. We'll go through the given data. Date, close, number of shares, total turnover. So this is nothing but a closing price for each day. From 15th to 31, 15th March to 31st March, there are 12 trading sessions. Each day the closing price he has given and the number of shares traded he has given, total turnover. So 15th March, the number of shares traded are 4,12,984 shares and the closing price is 363.45 and total turnover comes to 98 crores 89 lakhs 74,056. Like that, 12 trading sessions he has given. Now we have to value. The valuation date is 31st March 2022. And the first question is based on the last traded price. Last traded price is nothing but this 2,633.95. We are having a number of shares of 100. 100 multiplied with 2,633.95. Based on last traded price. Value of investment 100 shares into 2,633.95. It comes to 2,63,395 value of our 100 shares investment. Simple calculation. Then based on a weighted average price, how to derive the weighted average price? See the total turnover for 12 days. The turnover he has given. We have to go for total turnover of the all the 12 days and total number of shares traded of the 12 days. From that, definitely we can derive the weighted average price. Total turnover of all 12 days put together comes to total turnover. That comes to 762 crores. 59 lakh 57,941. This is a total turnover for all the 12 days put together. Total number of shares traded. Total number of shares traded. This comes to total of all these shares, 12 days put together. 30 lakh 25,000 shares. Then the weighted average price. That is nothing but a volume weighted average price. Weighted average price. 762 crores 59 lakh 57,941 divided by 30 lakh 25,000. The average price comes to 2,520.93. Now, value of the investment. Based on a weighted average price. 100 shares our investment portion. 100 shares into each share valued at 2,520.93. This comes to 2,52,093 rupees. Here the calculation is only the weighted average price. Total turnover divided by total number of shares traded over the 12 trading session. This is the critical one. Based on that weighted average price we can arrive. From that we have calculated value of investment of 100 shares. We'll go for one more illustration. Illustration 3. Panda Limited holds 4 lakh shares of AMGI Limited at a cost of 48 lakhs. So Panda Limited has invested in 4 lakh shares of AMGI Limited at a cost of 48 lakhs. That is 12 rupees per share it has invested. The following is the latest available balance sheet of AMGI Limited. Equity share capital, other equity. Non-current liabilities, total liabilities and equity, non-current assets, net working capital, total assets. Simple balance sheet information is given. Additional information include the face value per share is 10 rupees. Non-current assets of AMGI Limited includes land at a cost of 1 crore. The fair value of such land is estimated at 1 crore 75 lakhs. The cost of land is 1 crore, its fair value is 1 crore 75 lakhs. AMGI Limited has a contingent liability of 12 lakh rupees which is not reflected in the balance sheet. As a valuer, you believe that this contingent liability is likely to be incurred. Then you are required to estimate the fair value per share of AMGA Limited. Fair value per share. Estimate the fair value of investment in AMGA Limited in the books of Panda Limited. Estimate the compounded annual growth rate CAGR. Change in the value of investment if the investment was made 4 years ago. 3 different questions are questioned. The given information involves Panda Limited has invested in 4 lakh shares of AMGI Limited. For AMGI Limited, the information they have given balance sheet information, simple information, equity, other equity, non-current liabilities, asset side, non-current assets, net working capital, total assets. The fair value per share they are asking. No, as part of additional information, no. Fair value of land he has given, and there is a contingent liability. Definitely, we have to consider the impact of The fair value of land, change in the fair value of land, and contingent liability also. First, we will arrive at the net assets value based on the value given in the books. Net assets value is nothing but total assets minus external liabilities. Total assets, this is 3 crore 62 lakh 78,008 minus external liabilities 22 lakh 30,898. Net assets value involves total assets minus external liabilities. Total assets. The given value is 3 crore 62 lakh 78,008 less external liabilities. It comes to 22 lakh 30,898. 3 crore 40 lakh 47,110. So total assets minus external liabilities, nothing but a shareholder fund. So you can calculate from asset side, total assets minus external liabilities. Otherwise, even from liabilities, straight away, you can go for equity funds, value of equity funds. If you are moving from the liabilities side, simply it involves equity share capital 1 crore, other equity 2 crore 40 lakh 47,110. It's nothing but 3 crore 40 lakh 47,110. Both the ways we can calculate. So total assets minus external liability is one calculation. Otherwise, shareholder fund equity that comes to 1 crore. Other equity 2 crore 40 lakhs 47,110. Total comes to 3 crore 40 lakh 47,110. So either way you can have it from asset side or liability side. No. Anything else to be adjusted? Definitely. Definitely we need to adjust the fair value changes whatever he has given. The cost of land is 1 crore. The fair value of land is 1 crore 75 lakhs. So there is an increase of 75 lakhs in the value of the land. So that we have to incorporate. And there is a contingent liability of 12 lakhs. That also we have to incorporate. Increase in fair value of land. Increase in fair value of land. 1 crore 75 lakhs minus 1. This comes to 75 lakhs. To that extent, net assets value will increase. 4 crore 15 lakh 47,110. And there is a contingent liability of 12 lakhs. Contingent liability means which may or may not arise. If the unforeseen event happens, then only it will arise. Normally, it is not considered as part of the financial statement. We will be presenting it only as a footnote to the balance sheet. But the 12 lakhs contingent liability, whatever it is there, it is he's saying not reflected in the balance sheet. As a valuer, you believe that this contingent liability is likely to be incurred. We are expecting is to incur. So to the extent net assets value will reduce. Contingent liability 12 lakhs. So the adjusted net assets value comes to 4 crore 3 lakh 47,110. This is adjusted net assets value, or you can call it as net assets value. Then, what are the questions? You are required to estimate the fair value per share of AMGA Limited. Fair value per share, the number of shares. 1 crore is the share capital. 10 rupees is the face value of the share. There are 10 lakh shares. Number of shares. 100 lakhs divided by 10. Share capital 100 lakhs. 10 rupees is the face value. 10 lakh shares. Then value per share. Forty lakh 34 4 crore 3 lakh 47,110 against 10 lakh shares. So by dividing with the 10 lakh shares, we will be getting a 40.347, rounding off to 40.35. This is the value per share. Estimate the fair value per share of AMGA Limited, the first one, 40.35 we are in. Estimate the fair value of investment in AMGA Limited in the books of Panda Limited. The fair value of investment. How many shares the Panda Limited has invested? Panda Limited has invested 4 lakh shares. The fair value per share is 40.35 we are at. For 4 lakh shares, what is the value? Fair value of investment. 4 lakh shares into 40.35. This comes to 1 crore 61 lakh 40,000 rupees. This is the fair value of investment. Then the next one. Estimate the compounded annual growth rate. Change in value of investment if the investment was made 4 years ago. 4 years ago, Panda Limited has invested 48 lakhs. Now the value has grown to 1 crore 61 lakh 40,000. What is the compounded annual growth rate? This definitely we can through compounding factors. Compounding factors. Initially, Panda Limited has invested 48 lakhs. This has grown to 61.4 lakhs over a period of 4 years. Initial investment of 48 lakhs has become 161.4 lakhs over a period of 4 years. Now the desired compounding factor. 161.4 lakhs divided by 48 lakhs. Desired compounding factor. It comes to 3.36 times. It means 1 rupee invested 4 years ago, now it has become 3.36 rupees. Then what is the compounding rate? What is the compounding rate? So in compounding factor table or future value factor table, if you are referring value for 3.36 for 4 years. For 4 years, the value for 3.36. It comes to approximately 35%. So, compounded annual growth rate is 35%, or definitely you can consider. So, 1 rupee has become 3.36 rupees over a period of 4 years. So, at what rate it has compounded? We have to refer the future value factor table or compounding factor table for 4 years. That 3.36 corresponds to 35% approximately. So the compounded annual growth rate is nothing but 35%. Otherwise, even based on trial and error way also we can proceed. Compounding means at 10% we are compounding 1 plus 0.1 power 4 we have to consider. That comes to 1.4641. So if 1 rupee is appreciating at 10%, in 2 years it will become 1.21 rupees. In 4 years it become 1.4641 at 20%. Compound at 20%, it becomes 2.07 rupees. 1 rupee will become 2.07 rupees at 30%. 1 plus 0.3 power 4. It comes to 2.856. 2.856 at 40%. 1 plus 0.4 power 4. It comes to 3.84. 3.84. So at 30%, it is at 2.856. At 40%, it is at 3.84. From that also, definitely we can calculate. This is 2.856. Compounding factor at 30%. Compounding factor at 40% is 3.84. From the differential also, definitely we can calculate. The differential value is 2.856 at 30%. At 40%, 3.84. The differential. 0.984 for 10%. For 10%. From lower base of 30%, 2.856. The desired value is 3.36. The desired change. 0.504. 0.504. So for 0.984, it is 10%. For 10%, the change is 0.984. From other side, for a change of 0.984, the change in percentage is 10%. For a desired change of 0.504, what is the percentage change required? So from 30 plus 10 divided by 0.984 into 0.504. For 0.984, it is 10%. For 0.504, how much percentage? Definitely you can value. 30 plus 5.12, that comes to 35.12%. Like this also we can calculate. This is based on interpolation method, or you can call it as the trial and error method, starting with 10% we started, 20% we moved on, then 30%, then 40%. The desired value 3.36 is lying between 30 and 40%. For the 10%, differential value is 0.984. From 30%, the desired change is 0.504. For 0.984, it is 10%. For 0.504, how much? So 30 plus the remaining fraction comes to 5.12. That is 35.12. Like this, definitely you can calculate. So these are all the calculations as part of business valuation. So it involves little bit tricky calculations, which we have to learn thoroughly and practice thoroughly. If you learn thoroughly and practice thoroughly, this is definitely a scoring paper. Out of the 50 marks business valuation, if we are going to put a wholehearted effort, 35 to 40 marks are definitely possible. And the effort that we need to put in this business valuation is comparatively less when compared to other papers in the same group or the other group. So the same stage or the other stage. By concentrating on this particular area, definitely we can derive much more value in terms of marks. This is definitely valuable area and scoring area from exam point of view. Like this, number of minute calculations and tricky calculations will be there in business value. We'll discuss a few of them in definitely in next classes.